Hello guys, it's Max here from Daily Market Movements and welcome to another episode of Commodity Watch. In today's episode, we're going to be quickly analysing the gold markets and the crude oil price chart. Just want to make it very clear at the start of today's video that I have just opened a gold position. Now, if you would like to copy my trade and join part of our streaming service, then you can go and find that video over on my website, dailymarketmovements.com. It's this one here. Title, New Gold Signal plus update on crude oil signal, because we also have a crude oil trade running as well. So if you go and join for a very small fee of $19.99, you will have access to that video where I analyze both markets in more depth. But we're going to keep this video very short and sweet. We have the gold markets that have previously broken out of this downtrend, which is fantastic. It's very bullish. And we ran into the 0.5% fib level and we struggled to break above it. Now, what I was anticipating was a very fast move to go and retest the top of that uptrend line. Sorry, the top of that downtrend line that we've just broke out of. But we haven't really seen that. In fact, you know, during yesterday's session, we broke down to prices as low as 1850 and we've already bounced. Now, my problem is with the gold markets is look at the RSI. We are considered to be overbought. And when we were last this overbought, that is all the way back to June. So June 2021. And what happened is that we saw a massive 8% decline in the gold markets. And prior to that, when we were this overbought, it was here all the way back at the beginning of January. And well, from there, it led to a 14% decline in the gold market. And prior to that was all the way back at August, when of course, that obviously led to a huge drop all the way from the all-time highs here for the gold markets all the way down. So basically a 20% drop. So that is, one of the technical reasons as why I have opened up a gold short position. I'm not going to announce where I have, where I'm currently targeting or where my stop loss is, because it's very technical, but I am a shorter of the gold market. And as well as that, there's many fundamental reasons as to why I decided to open a short position. We have the Fed, of course, earlier on this month, I think it was the 5th of November, they announced that they will be beginning to taper. Because for those who do not know, for the past 18 months since COVID hit us and we saw the indices, the broad indices decline 30% in the space of a week, which was, of course, last year. The Fed come out and slashed interest rates down to an all-time low, down near 0%. And as well as that, they've been injecting $120 billion of capital into the financial markets every single month. Not year, every single month. And this has led to the Fed printing money. And, it has devalued via US dollar. And as well as that, it has caused a significant amount of inflation. Okay, we've seen the government handing out stimulus packages, checks, to businesses, grants. And this has caused a very high level of inflation. And during today's session, we've had the UK come out and announce that their inflation is as high as 4.2%, which is more than double what their target is. The Bank of England has a target up at 2%. We saw a similar story last week with the US. I think inflation coming at 6.8%. Which is a 30-year high. Inflation, one way to combat that is to raise interest rates. So I do personally believe that we will see the tapering process speed up. And as well as that, I do anticipate for interest rates to be hiked earlier than what most other traders out there are anticipating. Because right now the expectation is at the beginning of 2023. I personally believe it will be Q3 or potentially Q4 at the latest of 2022. So that is a reason as to why I decided to short the markets. And once again, if you would like to copy my trade and follow me, and follow alongside me and become part of our Telegram group chat and streaming service, then please head over to my website, dailymarketmovements.com, where you can then watch my video where I go into depth and explain my trading strategy and give you that signal. And also, sorry, I forgot to mention that link is in the description of this video. But let's move over to the crude oil markets now. Really quickly, crude oil under pressure for the second day running, currently trading at $79.78. We've been hovering around this $80 area for some time. Now, I will admit, I do have a buy signal. Again, I'm not going to share with you where my take profit and stop loss is. It's very technical, and you can go and find that in my latest video. But we have had some analysts come out and call for lower oil prices over the next couple of months. That's because they're anticipating for the oil inventories to increase. That's why we are seeing some down pressure here for the crude oil markets. But ultimately, I think we rebounce here and trade towards the upside. But that's my little short update for the crude oil markets. Nothing really more to say. We've been trading around this $80 area for the past 4 to 5 days, so not too much movement. So I'm going to keep it short and sweet with that. But that is it for today's videos, guys. I thought I'd just give you a quick update with regards to the gold markets and crude oil. Thank you very much for watching today's video. Please subscribe to my channel and give this video a thumbs up. And don't forget, if you'd like to copy me on those trades, then head over to our streaming service where you can then come down to Commodity Watch and find this video. Thank you guys and have a lovely evening.